Next up we have Morrie Goodz, who is a mining geologist, certified mine manager, and he's a fellow of the Australian IMM. He has more than 30 years of industry experience, including 9 years overseas in North America and Africa. But more recently, he's been active here in Australia in various roles, in fact, as an operations manager, technical director, chief geologist, at a number of properties, including A1, Morning Star, Daisy Milano, and the Kalgoorlie Consolidated Gold Mines. He's also a non-executive director of Consolidated Gold. He's here today in the capacity as a managing director of MacPhersons Resources, and I see actually interestingly that his chairman is Ashok. Some of you, when you go down the palace, may not recognise this, but apart from the fact that Ashok runs it, he's also quite an active entrepreneur here in the region. And so the next time you go to the palace, you know who to ask for. So we're looking forward to your presentation. Morrie, off you go.
Thanks, Nick. I'd like to thank all the group here at the Organisation for Diggers and Dealers. It's a privilege to be able to have an event here in our local community, and MacPhersons is another local project based here in Kalgoorlie. So that's a photograph of our operational site, which is 15 k's out of town. What I'm going to do today is just basically give you a run-through quickly of our projects, a bit of an update on who we are. To many of you, as Nick said, we are local, and a number of people know us as a group that's been here in Kalgoorlie, some of us for 20 and 30 years as operators. And what we're going to do is follow up with a little bit of a video just to highlight some of the outcomes that have come from our feasibility studies that are just closing. And then we'll move on, and I'll go through some of the detailed technical parameters towards the end and give you a wrap, and hopefully not have too many questions from Keith. So standard disclaimer, premier mining location. I think you have had great introduction from a number of people today, and just before from John. Our operations are located 15 minutes to the east of Kalgoorlie, and the company was originally formed on project area of MacPhersons Reward Gold Mine, 30 minutes to the west of Kalgoorlie. If you look at that tenement holding there, effectively everything north of us is bounded by Barrick Gold. To the east of us is all Newmont and Barrick. To the south is Alacer. And to the east-southeast is Silver Lake. So effectively we consider ourselves in a premier part of town. And since we spoke here last, we've increased our tenement holding by 50%. We've just recently entered into a farm agreement with Independence Group, who have 4 local goldfields mines. And it was a great opportunity for them to look at divesting a large tenement holding here adjacent to the town of Kalgoorlie, where we could optimize the exploration being based here. What we've achieved in the last 20 months, and it's only been 20 months since we started these projects, is we've acquired some great assets, including a mill. We have a processing facility which historically produced silver and gold up until 2007. It was put on care and maintenance, and we've looked at building on that. We recently completed 85,000 meters of drilling, and much of that was diamond. We've got 365,000 meters in our drill hole database, and we're processing that now. When we took on the project, there was 0 silver resource, and we have taken that, we announced just recently, to 23 million ounces in silver equivalent, and that is based on 12 million ounces of silver, and the balance is the zinc and the gold credits that we will get out of the deposit. Separate to that, we've taken our resources, which we had at Coolgardie at 100,000 ounces, and with an announcement that I'll make later today in this presentation, we have increased our gold resource to 460,000 ounces. And much of that resource is in the measured and indicated classification. And we've also discovered and extended a zinc body, and we currently have a resource of 65,000 tons. And we have some fantastic copper and nickel results that are coming along, and they form part of our exploration path to the future. And we've, in the last year, put together a fantastic exploration team. And when we look at not only the directors who have a large experience in base metals, silver and gold, and in particular in the Kalgoorlie and West Australian goldfields, we also have a management team of which many of them have been in base metal mining before and have been in the Kalgoorlie goldfields for some 20 or 25 years. And so we have a very highly skilled team experienced in mining the commodities that we are going to develop. So we'll discuss a little bit about our road to production as we just completed the feasibility study on the mill. Quickly, we also only formed in 2010, and we have 100% of all our projects, and that's fundamentally a very important thing as it keeps us in control of what we're doing, and we can make the appropriate decisions. The directors and the management team have 37% of the company. That's a lot of skin in the game, and we obviously have a lot of reason to make this work and make it successful, and we have the track history to show that we can do it, and we intend to do that. We also have major investor RK Mine Finance, part of the Red Kite Group from New York. It's our third biggest shareholder. You've got our board there, and you're familiar with Ashok. If you're not, you should be. And we also have Jeff Williams, who's the founding managing director of Mineral Deposits. And the rest of our team is very experienced there with Stephen and Randall. And all these people are at our booth, and I'd welcome you to come to booth 114 and meet them and discuss what we're doing. Also, the person whose phone just rang, that'll be a slab of beer to everyone at the booth.
Yeah, here.
Aside from that, I think it's a really good thing to look at this curve. Now, I think there's a lot of positive plans that the companies that have presented here, this conference, have shown that there is upside to the industry, and we are very bullish. When we looked at these projects 2 years ago, and that's where this price curve starts, we were positive about the future. We could see the growth. We could see that we could make it work in this price environment. We go 2 years forward to today, and a lot of the prices are very close to what we saw 2 years ago. And we are still confident and still bullish that we will make this work. So I think one thing everyone should take away from this conference is that we will make this work. Everyone out there has a plan to work hard, will achieve success. And I think there'll be a lot of people coming away from this conference who have confidence to move forward. And in light of the changes that are coming in September in a political environment, I think we have the right environment to have success for mining in Australia. Look, some of the project schedules that we've got in front of us, without a doubt, we have achieved a fantastic amount of things this year. We announced our resource upgrade only 2 weeks ago. That was another 23% increase on our resources in the last 6 months. We announced our first ore reserve statement yesterday, and we converted 46% of our resource into reserve, and I'll show you how I believe we'll convert the rest of that in the very near future. All our projects are open at depth and open along strike. So the growth potential is phenomenal, and we already have some drill holes into those areas to show everything is continuing forward. I will break to you today, so it's essentially a release that we have completed our Boorara JORG resource. It's effectively a maiden resource because the prior resources on Boorara were based on 1990s work, and it's the first time that diamond drilling has gone into the deposit. Since then, we completed the diamond drilling in June. It's been highly successful, and we've had some very pleasing results with a 3-fold increase in the contained gold resource. And again, some of that is in measured and most of it in indicated. So we're very confident with the mine designs that are being prepared. And we will release the Boorara mine designs in the very near future. We have essentially just completed the feasibility study on the plant. And I will take you through in the video. We'll have a little bit of a 3D look at the plant as it has been designed and using the equipment that we've already acquired from the existing plant, plus some assets that we've acquired secondhand that are good quality, that have delivered value to us, so that when we look at the capital cost going forward, we only have an incremental capital cost to get the plant expansion delivered. And as you can see in that list, for the first half of 2014 is when we start putting the plant together with a view the middle of next year, early second half, we will be starting to be in production. We now have the video flyover. There is sound in the video. I'm going to ask for the sound to be turned off so I can actually talk to some of the video, because essentially a number of things have happened in our new releases since we actually released the video. So just quickly, here's where we are. You know where Kalgoorlie is, obviously. You're here. But effectively, our projects are only 15 minutes to the east, to the right there, and 30 minutes to the west at Coolgardie. We're going to zoom in on Nimbus right now. It's an asset we only acquired 20 months ago. 2 existing pits that finished in 2007 and produced an average grade of 350 grams per ton. They produced 3.6 million ounces. The drill sections you see there, those drill intercepts in red are greater than 200 grams per ton per meter. And as you can see, there's some intersections there going into the thousands of grams per ton per meter. Those blue blocks represent the initial silver resources that were defined. And in between those resources, we have a gold deposit. There's a series of gold lenses. Some of the intersections, a couple of meters going 57 grams per ton. Many intersections going greater than 5 to 10 grams. So this gold will be mined as a byproduct during the silver mining. And below the silver resources, we have the zinc, which you see there in the red. So effectively, we will be producing a minimum of 3 commodities in the initial mine production. And that will grow as we define more of the lenses in this deposit. What you see here in the green outline is our pit design as we've redesigned it now. So we've got a pit cut back on each of those pits, which is followed by an underground mine. This has all been designed as part of our ore reserve. The silver super pit, as you see that orange outline, is what will happen if the silver price starts rebounding to where it was only 5 months ago. And we see that as a likely scenario in the future, and we will develop to that end. Here we have the new plant site. So the expanded plant will be 500 meters from the pit. We will move some of the existing plant to that position, and this takes in the existing plant as designed, including our components. We already have the primary crush circuit and some of the feeders. We have the ball mills, which you'll see as we come around this side of the plant, and we've acquired a variety of other components already, including there's the ball mill, a leach circuit, all those smaller tanks in there we've already got. And the Merrill Crowe plant is something that we have currently being constructed in the United States for shipment. You can see the pit in the background there on the top left corner. As we swing around, you see the proposed tailings dam and the integrated waste landform beside the pits. We're now going to move over to Boorara. Now, Boorara is only between 1,000 and 1,700 meters away from the Nimbus mill as it exists at the moment. This will be additional feed into the Nimbus processing plant. Boorara has multiple gold lodes. Now, we've redefined Boorara into 5 domains and approximately 30 gold lodes. It is structurally contained within a dolerite, and we had initially designed this as 6 open pits. With our latest drilling and design work, we're now looking that this will probably be only 3 pits. So it is all linking together. And this is ongoing work. The actual release will be tomorrow, and the mine designs will be next week. This just gives you a quick overview, but it's just not Boorara and Nimbus. Within that 5-kilometer threshold, we have over 10 other prospects that already have drill holes in them. A number of them represent the copper zinc ore bodies, which is where we see the future. And if you're familiar with this domain, as you saw with Carl's presentation, these volcanic massive sulfides occur in a series of lenses. So you have multiple mines, and we've already got the geochemical data and the drill holes to show that we've identified multiple lenses, and we will develop these in due course, and that's the pipeline of our projects. Now, I'll just quickly run through with you some of the detailed slides to say where we are. This is what we call some of our direct shipping ore. So this is going 55% combined zinc and lead and over 3,000 grams per ton silver. This is not uncommon. We do have a number of these intersections. If you come to the booth, you can have a look at some of that core. Here's some of the ore bodies in a plan view. And what you see is we have a series in the upper two photos of what we call supergene mineralization, which is immediately under the pits. And then below it, you see the series of lenses. These are subvertical lenses. We have identified more than 20 of them, and we believe there are many more to come. We have identified here what is effectively the silver-zinc lenses in a similar way to when Golden Grove or Jaguar Bentley were discovered. They were focused in on the zinc lenses. And then in due course, they found the copper feeder deposits. Now, geologically, these deposits are essentially the same. And we have no reason not to suspect in due course that we will be finding the copper feeder zone. We already have intersections, for example, 2 meters at 6% copper, and we have some other interesting targets as well. This is the way they look in cross-section. As you can see, there's subvertical in there. The scale bar is 50 meters. Most of the stopes we have designed are 2 to 8 meters thick, but as in this case, you can see there's a stope there that's going to be 20 meters across. The mineralization is classic to the gold fields. The mining methods are standard, and many of our operational team and the board have been involved in mining this style of deposits numerous times. And as you know, with the Kalgoorlie Goldfield, and you saw it today in Les's presentation for Silver Lake and the Daisy lodes, these are multiple lodes that stand side by side. And it's just a matter that you do one set of development, and then you cross-cut, you mine the next one, and the next one, and the next one. So there will be a growth plan that will continue on from this. This is the way it looks in 3D, and just so you don't have to try and read those images, those red colors you're looking at are the stopes that are going more than 1,000 grams per ton. This is the current design. So this is our ore reserve design. Purpose of this design was to look at a project which had an operating cost that would be maxed out in the order of $12 to $13 an ounce. That would give us a substantial buffer in looking at the price market going forward. This particular design will deliver 1.1 million tons at a recovered grade of 297 grams per ton. So the recovered grade after mining dilutions and recovery and everything else processing is the equivalent, if you think about it in gold, of being between about 5.5 and 6 grams per ton gold. This mine model will take about 2.5 years to mine, and it will deliver payback on the capital within 2 years. This is essentially our first stage of the mining operation. Where do we go from here? If you see those stopes in blue, they're now the stopes in dark green with the red lines through them. Those are the development drives. Now, what I'm showing you here, all around them, all those green blocks that you see up there are not part of our mine design plan, but they're all measured and indicated resources. They're all fairly well defined. And in our next mine plan, we're actually going to extend the mine life. And based on our analysis today, that will add another couple of years to the project, and we'll keep it growing. So we're just looking at the first steps just under, as you can see, the 2 pits. And we have substantial other bodies identified within 5 kilometers of this, okay? Where we look at this going down, those black dots that you see in the middle of that red zone, they represent the drill holes. Now, I have to say the worst intersection there, if you can read the numbers, is 61 meters at 142 grams per ton, silver. Okay, that's straight silver. It doesn't include the extra credits. Below that red zone, there is not a single drill hole. So the scope for extending this is immense. And we feel confident that we will continue to extend this down dip and down plunge. And we believe that this project will develop to being substantially larger than a 5-year mine life. This is where we've come from. So the histogram on the left shows that we started 2 years ago with a 0 resource. We've taken it to 23.5 4 million ounces and growing. And on the right-hand side shows that if we continue to go in our development plan, that the middle of next year we will be looking at starting production, and we will ramp that up to 2.5 million ounces and then continue to grow that production profile. Boorara, just quickly, I'm only going to get into it very briefly. The announcement will be tomorrow, but the initial resource is 7.4 million tons at 1.1 grams. This is 1,000 to 2,000 meters from the ROM pad at the mill. We have these bodies outcropping on the surface, and as I mentioned before, we took it initially from 6 pits. In this design, we're down to 4 pits. We believe now we're possibly looking at 3 pits. So the design is being finalized, and this will feed directly into the Nimbus mill and add additional years of life to this project. What we also just saw from John is that heap leach projects are and have been common in this region, and they are successful, and we are currently also undertaking a design to look at heap leaching this entire dolerite as a bulk mass. Effectively, for the few geologists in the room, there's your rocks, and there's a cross-section of the ore body to show you how big it is. We essentially plan to mine the entire dolerite dike. And in analogy, this geology is identical to Mount Charlotte. So for those of you who are familiar, the poppet head at the end of the main street in town is the Mount Charlotte gold mine operated by KCGM, and it is a significant deposit. This slide just highlights all the other projects we're working on within 5 kilometers of the mill, and I guess what is our provision of difference? I think it's important that we are diversified, and yet we're operating from one mine site with multiple open pits and underground operations within 2 kilometers of the mill. And I think what that gives us is the freedom and the ability that once we start production, we have a pipeline of projects which can be developed from self-generated cash flow. I know Keith has a couple questions, so I'll break it there.
Thank you very much, Morrie. Was there anything that wasn't fully understood or areas of uncertainty?
Yes, Keith?
Can't disappoint you, Morrie. First up, what do you expect your strip ratio at Nimbus and at Boorara to be? Secondly, when do you expect to be mining from underground at Nimbus, and what kind of percentage of your production will be coming from underground? And lastly, if Boorara does come in, how many ounces per year of gold?
Thanks, Keith. I think there was more than 3 questions with the parts. Quickly, the strip ratios. Strip ratios at Nimbus will initially start. Now, I got so many numbers in my mind that I should probably refer this back to the booth. But I would say initially the strip ratios will probably be in the order of 8 or 9 to 1 from memory. And the 2 pits will vary slightly. And the strip ratios at Boorara, we have 2 models going there. For the high grade that we would send initially directly to the mill, the model has the strip ratio being in the 3s, 3 to 1. And if we look at the heap leach, some of the models were suggesting we could look at strip ratios that are less than 3 to 1. And I'll leave it for the mine design report. But in our opinion, they're fantastically low strip ratios considering the grade. For the timing of the underground is 8 months from the commencement of the pit operations. So we will do the 2 pits, the Discovery Pit and the East Pit cutbacks at the same time. In month number 8, the decline will start from the East Pit. The Discovery Pit will be continuing on. We will bring the production into line from the underground while the Discovery Pit's still being mined. And then as the Discovery Pit starts closing, we will start a second decline from the Discovery Pit. We will join the decline, so we'll have haulage from 2 declines at the same time, and that will allow us to start ramping up production. Initially, the production from underground will be about 50-50 in design model 1 in ounces, but in the long term, in our first resource model, about 80% of the silver ounces will be coming from underground. And of course, the extensions from that. And the last question, possible answers from Boorara. We would probably be looking initially at probably in the range of 20 to 30,000 ounces per annum, and then ramp that up as we're able to bring things more online. And it's a matter of whether or not we're running the mill feed of gold and the heap leach in parallel will increase that ramping further. And at the same time, Keith will be aiming at getting 2.5 million ounces of silver and ramping that up as well. Anyone else?
I don't see anybody else. I think you're done for, actually, Morrie.
Okay.
Yep, that's great. Thank you very much.